Robinhood went public this Thursday, and the long-awaited listing was basically a bust. The stock trading company priced its IPO at the bottom of its expected range, and its shares then sunk more than 8% before the market closed. It was, according to Bloomberg, the worst first day of trading ever for a company that raised such a large pool of capital in its IPO. We may look back on this day years from now and laugh, like we do at Facebook's disappointing public debut in 2012. In a broader context, Robinhood going public and reaching a $30 billion valuation might be a positive step. But the company fell well short of the sort numbers that had been tossed around in recent months, even after a 6% spike in its share price on Friday that recouped some of Thursday's losses. The one-time retail investors get a serious chance to invest directly in a major IPO, it turns into a flop. Robinhood has been rightfully linked to the rise of a different kind of trading, one where sentiment can matter as much as fundamentals to a company's stock price. But this week, at least, that sentiment didn't go Robinhood's way. Even among the flock of billion-dollar companies that have debuted on Wall Street this year, Robinhood is an exception. It is the sort of startup the word unicorn was supposed to define, before it became a cliché. But this week, Robinhood was not an exception. Because it was one of at least a half-dozen companies to encounter serious headwinds on Wall Street over the past 7 days, a sign that the tides may be turning in a market that has been historically hot this year, already setting a new decade high for annual IPO activity with July barely in the books. Yes, we may eventually look back on Robinhood's letdown and laugh. But we may also soon see it as the moment at which 2021's wide-open IPO window began to close. Car battery maker Clarios International postponed a public debut that was scheduled for this week, citing market volatility. Advertising technology provider TEDS did the same thing, for the same reason. Combined, the two companies had hoped to raise more than $2.5 billion. Earlier in the week, fruit giant Dole downsized its planned IPO, slashing $600 million from its hoped-for valuation. When the company debuted on Friday, its stock slid another 9%, dropping its market cap to about $1.3 billion, a 44% decline from the valuation it was eyeing a week ago. Meridian Link, which develops loan origination software, and Snap One, a consumer electronics retailer, both saw their share prices sink this week in the first day of trading after private equity-backed debuts. And China's ongoing crackdown on foreign IPOs has turned off another pipeline to Wall Street while also leading to serious slides in the stock prices of many Chinese companies that recently went public in the US, chief among them ride-hailing provider DiDi Global. Some companies are still completing successful public debuts.